What's up, guys? This is Wade with Trade ATS, and this is our weekly overview video where we try to predict which pairs are going to be the best to trade next week or during this next coming week. Real quickly, I want to revisit what we talked about last week. We talked about Euro NZD and we talked about Dollar CAD. Both of them moved. One of I want to zero in on real quick just to kind of revisit. I think there's some lessons to be taken from what happened throughout last week. We did hold under expansion. If you reference the video from last week, I talked about I wanted to hold under this liquidity line here. And that is definitely a good sign if you are expecting the market to keep going down. But you can see we had a couple of days where we ranged back up. But in that video, I said, look, if we pull back, we're going to first test the expansion line, which is what we ended up doing. And if we got through the expansion line, we were going to go back up to the liquidity line up here on the daily. But we held under expansion, which is good because this is your trend signal. Like this is the expansion lines are the difference between going long and short for your directional bias. And for those of you that aren't familiar with our methodology that end up watching this video, our directional bias is basically we look at a higher time frame to tell us I'm only looking for buy trades or I'm only looking for sell trades, buying opportunities or selling opportunities. And these lines are the dividing point in the market that pop up that tell us what to be looking for. So we came up the daily, we had one green daily candle and then we turned red. Our first opportunity on that was right here, and you can see the thing just fell apart. So this was the first expansion opportunity to enter on the 15. Depending on what time frame you're using, there was smaller opportunities on the 5 minute. If you're going down to the 1 minute, there was 1 minute opportunities. But facts are, it doesn't really matter what time frame you're trading on. The trend was short, and that was defined by what's here. Why is that so significant that the daily turns short? Why? Because the weekly is short. Where are we expecting the weekly to go? We're expecting it to go back to expansion at least. So down in this range right here. And that's where it's headed. Last week on the video, we predicted this. We were up in this neighborhood up here, and we predicted, well, we were actually right here. And we said, well, how far can we go? And then if we snap that liquidity line and we hold below this one, then we got, another 240. That's where the real gap is right there. And that's this gap between these liquidity lines here kind of represents if it does decide to retrace all the way down to expansion, that is that 200 pips right there. That's the majority of that gap we're looking for. So let's see, one spot 32287. Okay, where's one spot 32287? It is right. I don't know. It's pretty small. I don't know if I'm going to get it on the weekly. Anyway, it's in this range right here. That's where we were, and we measured down to expansion, and we thought, okay, there is 248.8 pips of opportunity to expansion. So this is how we project what the possibilities are for the following week. There could be a 200 pip trending week. That's something that we want to participate in. So the days that are going to be trending are going to be in that weekly trending direction. This is not rocket science. Weekly's down. Look at, we just came off of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 weeks. The 13th was the turn, but you're talking about, let's call it 12 weeks of up, okay? For every week that you traded in the last 12 weeks, if you were using that as your directional bias, maybe on our system, we're waiting to get through expansion to get the maximum amount of probability in our favor. But still, you got, what is that, 8, 10 weeks of up opportunity. Nothing but long. You literally had to wake up every morning and buy. Okay? That's what it cooks down to. So if you understand the importance of multiple time frames and getting that directional bias in your favor, that makes your life dramatically easier when you're trying to trade and trying to find an entry opportunity on the short time frame. That means that every day that's under expansion or over expansion, depending on what the directional bias. If the week's short, we're looking for under expansion, right? So every red day that's under your last expansion line, you know, you got a high probability of getting paid. You just need to find some like non-idiotic spot to enter on a pullback on a smaller time frame, and you have a dramatically higher chance of being in the money. And then you just need to manage that position. So I mean, that's really the simplicity of what we're trying to do here, and that is what ended up happening on the dollar CAD. So I don't mean to go too much in depth with that, but I mean, this was out of, you got roughly 4 weeks in a month. Okay, not every week's going to be outstanding, but last week was this is the epitome of outstanding trending weeks. Look, I get there's people out there that they want to trade the range. They want to buy the highs and sell the lows, and they're just wonderful at that. But the reality is, I'm going to tell you right now, I've been doing this a long time. The reality is the easiest money and the most sustainable money you're going to make trading is in the trend. You have to be an expert at defining the overall trend according to the time frame that you can manage your position on. Okay? That, if I can impart one piece of advice to take away from anything that I ever do, is understand the trend according to the time frame that you can manage your position on. Okay? This was, for the majority of our subscribers, a lot of them they're trading every day, they're checking their positions. This was an ideal situation for that. Okay, so that's why I kind of wanted to cover that. There was your first entry according to expansion, and then under expansion, these are pullbacks. These are a little more risky, but they are in trend, and they all paid. The reason why they paid is because you got multiple time frames backing up, and we are under expansion on the daily, and you got the weekly backing you up, and you have a price target that you're headed to, which is defined. You know you're going to if it's going to push, you're going to fill a very specific gap, and it's not over yet. It could definitely, we got from where we're at right now, there's another 9,800 pips just to expansion if it wants to touch that level. It doesn't always touch the level, but that's where it's going to get to. And once it gets to expansion, it's going to hate this level. If you guys look back on ATS software, price hates expansion. Look, I'll prove it to you real quick. Price hates expansion levels. It does not want to stay there. Look at this one. We had an expansion back from these areas right here. Price came up, it rejects it. Rejects it. Look at here, we got a new one here. Comes down, rejects it. It hates being at expansion levels. And that's why they're so accurate at telling us where the turning points are. Because price doesn't want to be there. It wants to go. It wants to go long, wants to go short. It just does not want to stay on those white lines. So that's your defining mechanism to know what you're looking for. You're looking for long, you're looking for short. So anyway, I don't mean to ramble on that too much. So that's what I wanted to cover on that. I wanted to cover that as far as what happened last week, because I think it's an excellent lesson. There was a lot of opportunity on the short side last week, and I know a lot of you guys got into that and made some profit on that, but I want to make sure that you guys are getting the maximum value from the system. It's very important to me that you are getting value from the system. If you're not getting value from the system, then don't use it. I don't want you on the ATS platform. If you are getting value, get the maximum value, actually make it work for you. Okay? Very important to us here that you get that value. So that being said, let's move on to what I think is going to move this next week. Okay, so moving on to what my recommendation is to keep your eye on for this next week is none other than the pound Aussie. I do think the dollar CAD has some juice in it, so I would take a look at that too. I think that it's got another, like I said, about maybe another 100 pips to the downside. We'll see about that. But the pound Aussie, here's the reason why I think this thing is about to start swinging like crazy. Because we just popped out of a box on the weekly chart, okay? And the box is the ultimate symbol of we're about to go volatile on this time frame. Okay, it's pretty much a guarantee that you're going to see volatility according to that time frame. So if we are looking to make money on a weekly basis, okay, that means that we need weeks to move. We can't have it open at a price and close at the same price every week. We need it to move. And we just popped out of a box. We're at expansion. And guess what? Price hates expansion. It hates it. It doesn't want to be here. Where are we at right now? We are at expansion. Okay? So right now we're agreeing this thing very well can push down through expansion on the weekly chart, and we can get days down. So let's explore what happens at this point. We got expansion right here. If we push down, there's 378 pips roughly to a bottom liquidity where we may take a pause. Okay? If we go up, where's liquidity? Get a better read on the price here. Okay, so if we go up, there is 638 pips to the upside to that liquidity. And let's check the active high here. 425, 430 pips to the upside, just to the active high here too. So point is, this thing is ready to swing. I don't know where it's going to swing, but here's the boundaries that we're going to deal with, okay? Right now, you're short on the daily. So if it stays short, you hold red on that daily, we hold under expansion right here, then guess what? We're going to here, to at least this expansion line. That's our next level to test, okay? That is 272 pips away. So there's going to be no doubt some awesome opportunities on the shorter time frames if you're trading intraday. If you're trading New York and London, well, there you are. There's your gravy. Same thing to the upside. Right now we got 168 pips just to the upper expansion that we're currently working with. So there's kind of your basic playground of where you're working with right now. If we really push through that, then if we end up holding above expansion on the weekly, guess what? We are for sure going to the tops of these weekly candles. That's a 472 pip move. So let's see from here, from where we are now. Okay, well here's your 472. We have a liquidity line up here, and the liquidity lines are not going to transfer it to the exact same levels through time frames because they're based on the time frame that you're looking at it on. So it's not going to be at the exact same levels, but you should have similar levels to drill down on when you go to lower time frames. So that would be your level right there. And then right above that, we got even higher, which is 654, which probably is somewhat representative. Yeah, it's of this one right here at the top, 654 right there. So that's kind of what you're looking at. The biggest reason I'm drilling down on this one for this week is because we had 1 week pop out of the box, okay? Price is going to settle because we had a massive release of liquidity. All kinds of people are now getting interested in this pair because of that. And now something's going to happen. Okay? But you have, when you're using this system, the whole point of this is you got definitive lines to use as the turning points of what is going to happen here. You got your expansion, you got your liquidity lines, you have exact price levels to deal with. So when you're day trading or whatever you want to call it, you're getting up in the morning, you're trading, and you see a run or you see something really take off, you have an understanding of where can this thing actually go to? What's the probability in this trade for what I'm in? What's the probability this can turn into by the end of the day, the next day, and the day after that? And that's going to be wrapped up, you're going to know that in this week. So anyway, just going back to simplify it again for those that are new with us and everything. Look, we're at expansion on the weekly. Price hates expansion. It doesn't want to be here. It's going to move. I guarantee you with 100% conviction that price hates this line and will move. And that is your dividing point between long and short. Okay? I can't tell you what it's going to do because I can't predict the future, but I can tell you how to react. And as a professional trader, as someone who wants to trade for a living, you need to learn how to react and you need to learn how to put the pieces together with the market as it unfolds. And then with that, according to the time frame you're trading on, you will find successful trades, and you will be able to make quality decisions in the way you enter and exit the market. So that's what I think is happening for next week. Hopefully this helps. I was a little long-winded on this one, but hopefully you guys find some value in it. And I will see you guys in the next video. So thank you very much.